What's going on, guys? It's David Piatek, and today we're talking about budgeting for home ownership to include the two main things that go into purchasing a property is, are you considering doing a down payment and what closing costs look like? So we're going to break that down because it's all relevant to your purchase. Yes, the VA home loan is amazing. There's a lot of benefits to it, like not putting a down payment. But again, does it make sense to do that? And in a way, the VA does encourage you to put a down payment, and I'm going to explain that here in a little bit. So, a couple things to keep in mind while you're going into that home ownership journey. So, the one thing that we see people that hold people back from home ownership, especially with like a VA home loan or really any type of product, is really understanding their budget on a monthly basis, what they can afford, controlling spending, right? So you're then able to save money for things like closing costs or considering a down payment. And if you're not doing a down payment, can you use that money then to fix up a property you're purchasing? And remember, there's also costs associated with home ownership. I'm going through that right now, buying tools and things that I need for around the house. And trust me, this stuff adds up. And if you don't have that, plus maybe a little bit of a cushion, then you could be in or put yourself in a in a not such good position. And you want to start this process as early as possible because you do need to give yourself time depending on your financial situation. If you have good questions or want to do a one-on-one consultation, happy to help. And you guys could schedule with me down below. So one of the things that I talked about was the down payment. And people will ask, like, why are you asking if I want a down payment on my VA home loan? Well, I've done plenty of videos around the VA funding fee, and I'll also link it in the description below. But in essence, if you don't have a 10% or greater VA disability rating, then you're going to be paying the VA funding fee. Now, the VA funding fee varies based on if you're using it for the first time or multiple times. But I'm going to go with the latter. When you use the VA home loan multiple times with no down payment and no service-connected disability, your VA funding fee is 3.3% of the purchase price. So as you can tell, if you're buying a place, let's say for $500,000, that's tacking on a rough about $18,000 to your closing costs, which again, it puts you in an upside down equity position. This is why I always say it's important to file for your disability if you want to do that, or if you've been thinking about doing it. I encourage you to at least to give it a shot. It's not a fun process, but it's something that definitely has its rewards. Like one of them being for the VA home loan, no VA funding fee, plus that income does count towards that, towards your qualification. The other part is that what I mentioned is they encourage you to do a down payment because if you do a 5% or 10% or more down payment, that VA funding fee gets reduced drastically. So again, you put yourself in a better position. And also, if you're selling a property and you have money that's coming to you, then you could use it towards the down payment and closing costs. So that is a caveat to all of this. Now, let's kind of walk through closing costs. Now, I'm going to give you a general overview of it, because it is some difficult to pinpoint what closing costs are going to be early on in a transaction, because most of the fees on, let's say, a loan estimate, which is the first document you get that breaks down the closing costs, and just to kind of FYI, that loan estimate turns into a closing disclosure a little bit later. Once all the final invoices have come in, there's other metrics that need to be met, like, for example, rate needs to be locked, loan needs to be underwritten, appraisal needs to be back. Typically, if you're doing a VA condo approval, that doesn't necessarily have to come through in order to issue this document, but it's going to give you a more realistic sense of what the closing costs are going to be, because they have all the final invoices. And then later, when you're at the title company closing, they're going to wrap up all the final invoices, attorneys, if there are any, sellers' figures, all of that stuff is going to get wrapped up together. Then you know your final amount. Now, but it's safe to say on a purchase transaction, it's about 3% of the loan amount. It's kind of on average. We've seen it lower. We've also seen it higher depending on who you work with as well. I'm always harping about the VA home loan being an amazing product, but oftentimes, actually looking at the data from the VA's servicer or how many VA loans have been originated, we can see that veterans get overcharged a significant amount of money on a monthly basis in the tune of over $40 million in extra fees, just because, remember, I've always say, if you are calling someone because you're watching an advertisement, you are paying for that advertisement in some way. So just kind of think about that and then look at your costs. And if you guys want a comparison, also happy to help that part. So what makes up a majority of your closing costs, right? It's going to be lender fees, origination fees, and discount points. There's going to be fees like title you can't control because, no, I'm sorry, not title, appraisal fees. Because an appraisal fee is ordered through the VA, so that cost is going to be whatever the VA appraiser charges or what the regional loan center has set. You have like top credit report fees, flood fees, condo fees if you have any. Then you have title fees, and every state does it a little bit different. Sometimes you pick your own, and sometimes you will have help from a realtor providing you or helping you find one, or you use the sell side. Now, always ask if they do a military discount because we've definitely seen that plenty of times. So it's worth saving a couple $100 if you can do that. You have government recording fees, which you can't control those either, right? That's going to be like transfer taxes in some states. For example, like Florida, you have to pay a separate tax to take ownership of a property. Both sellers and buyers pay that tax. But again, that's something you want to ask who you're working with if they have information on that. And also, you can go to the county's website wherever you're buying and look up the information on there as well. An important note with this also is you're going to have to set up your escrows, which is your taxes and insurance. Now, at times, you are able to exclude those taxes from a VA home loan if you meet the VA disability requirements for the county. Now, I did a whole video on that as well, so I will link that down below so you guys can check that out. I think it's important there's a lot of caveats with what you're trying to do, right? It's not just one part. It's accumulation of steps that get you to that final point of, hey, I'm signing and buying a home. And if that's something you're interested in, this is what the channel does. We want to get as much information to the veteran community as possible. This is why I do what I do, because I'm in it and I understand why it's important to pass that information along. So with those escrow accounts, you're setting up taxes and insurance. How much they collect for, that really depends on when you're closing in the year, what the tax cycle looks like. But again, you could reach out and we can kind of go through where you're looking to buy or talk with like a local realtor that knows that area. Now, another part to understanding these closing costs, right? We have the 3%-ish, give or take. You're definitely going to be more in the 5 to 6 if you're working with certain lending institutions. Keep that in mind. Is you can ask for seller credits to cover that. In markets where, I don't know, it's kind of tough because every market's a little bit different. So you're going to kind of have to figure out what that looks like. But if a market is very hot, meaning properties sell right away, very short cycles, it's harder in general, right? This is my opinion, on getting those offers accepted with seller credits. But there's definitely markets where we see people get 2, 3, 4% in seller credits. We've even had people pay off cars at closing because yes, you can do that. If you don't know, all closing costs can be paid for by a seller, plus an additional 4% in seller concessions to pay things off like car loans if you need it to help qualify or they give you the extra money. It may sound crazy, but again, we see it happen all the time. Another thing that you can ask for when it comes to helping with closing costs, one, you can get a gift from anybody. That's kind of unique with the VA loan. They do have to sign a note saying that that money is a gift, that you don't have to repay it, so keep that in mind. You can ask for lender credits. Now, it's tricky with lender credits because this is more technical, but kind of like back-end operations. The margins are just not there anymore to say, hey, we're going to get, lender may offer a quarter higher interest rate, but the money you would get back just isn't really warranted, I think. Especially right now, we just don't see the margins that big difference where if you're going up a quarter rate, you can get an extra 1% in lender credit. We're just not really seeing that across the market. Another thing that you can do is look into down payment assistance programs. We did a whole video on that as well, but there's a lot of restrictions with those programs, both in qualifying for them, being able to get that money. And then the other part's going to be, once you have it, if you move out, what happens then, right? You might have to pay that money back. There might be some tack on pieces to that. Now let's talk about some strategies for your down payment or closing costs. But again, you don't have to do a down payment. Uh, Watched the video not too long ago, Dave Ramsey saying VA loan are bad because there's no down payment, you have no equity. In a way, that's true, but that shouldn't hold you back from home ownership. And I'll just use a quick example of that. If you held off back in like 21 when rates were really low, and you missed that boat with that mentality, you are where we are today with a higher rate environment. Prices have continued to go up. I think it's now like 18 months straight or so. So all those things are things to consider when you're going through this process. But there's different avenues people get creative with. One thing when it comes to your closing costs, let's say, sometimes employers offer assistance programs with that. We've seen that. That's pretty nice. We've seen local churches offer some programs as well. And then you may have resources as well you may not be aware of that you can use, like a 401k or TSP account. I'm not a financial advisor at all, but I have a TSP account myself, and I have a 401k as well, right? So from my end, sometimes we'll have people tap into some of that equity and type in some of the money in the 401k in the form of a loan. And again, this is my opinion. That way you're just not liquidating it. You don't have to pay tax on it. You're just kind of borrowing against it yourself. And that money can be used for your closing costs. Now, that statement in itself warrants another piece to this, is that you can't go out and borrow money for your closing costs. In the sense that I mentioned, like, oh, you can take a loan out against your 401k, because that's your money that is in an account. You're taking a loan out against your money. That's fine. If you went out and got a personal loan, well, the lender's going to look at your last 2 months of bank statements, and if they see that, they're going to want to source it. Now, when that sourcing process, it turns out to be a loan, well, guess what? Then now you won't be able to use that money, and you could derail the transaction. So make sure that you talk with someone. Again, happy to help walk you through that piece. One strategy also is to set up a separate savings account. I would say put it in a separate bank, like not the bank that you're with, a separate one, so it's harder to access that money in a sense that you just can't access it as much. Overall, if you don't have a monthly budget, highly recommend one. I did a video on it not too long ago about setting up that budget. You want to reduce as much of your costs as possible from going out, subscriptions you have, and any luxury purchases that you are making, because again, that helps you set money aside or pay down bills to get to where you want to be. And you still, you may want to look into getting a side hustle, right? Getting a side job to get some additional money. But again, that situation's going to be based on each individual person. And you also want to be able to start tracking that, or everyone, again, financial picture is different. I would say you start a year or two out seriously looking at what your plan is for home ownership. It happens sometimes where people may not be looking at home ownership, but they get into it. But there's really never early enough time to get to at least talk to someone about it, maybe a pre-approval or pre-qualification, just so you know where you stand, your income and credit, what it gets you today, because that gives you that clear path down the line to execute on it, and revisit your budget on a monthly basis. Make sure you're tracking your spending, you're paying your bills on time, all of that fun stuff. So when it comes down to, hey, I'm actually serious, I want to be able to purchase a property, you have those tools lined up. So I hope you guys learned some stuff. Please share our videos with the veteran community if you like it, of course. Make sure you guys smash that like and subscribe button, and I'll catch you guys soon.